welcome to today's episode. I am the billionaire trader. So in this video, I'm going to explain the thought process behind this trade. Like I'm using the same model across all the video I've been making. So for this, we are not using daily time frame. We are using weekly time frame. We are starting with weekly time frame. Other videos that I've made, they we actually use the daily time frame bias. So today this one has to do with the weekly time frame bias. So let's go to the weekly time frame. I'm going to clear everything so that I can start afresh. We can start from this crash. So here on our weekly time frame, let's change to the line charts to mark out our key level. Just like the same process we'll be following across other videos as well. So we have this particular key level here. This is our resistance key level. So what do we want to see? We want to see that price gets to that resistance key level the first week rejected. So the following week, we know that's when we are going to look for our confirmation. So price got there last week, it's rejected. That's a signal. The rejection is a signal. The following week will give us the confirmation. I hope you get it. So the first week, price rejected. This week, what did price do? Price also went back to that key level as well, and the confirmation we are looking for is not on daily, it is still on 4 hours time frame. So price also went there, swept the previous week high, and on 4 hours time frame, what did we have? We actually had let's change to the line chart. We had sweep and break on 4 hours time frame, and that's exactly what we are looking for. We want to see that the first week price got to a key level and rejected. So the second week we have sweep and break on 4 hours time frame. So we have this sweep and break, sweep and break. So having that on 4 hours time frame, let's change to our candle charts. What do we have here? We have this particular candle here is an internal is a liquidity, although it is a bullish candle, and a bullish candle, the eye of a bullish candle in a bearish environment is an external range liquidity, and in that particular context it signifies a reversal. But what I in this case, what I usually look out for is price will engineer a liquidity. Something like this, when we have something like this, price will surely engineer a liquidity. If I want to take it trade and I don't have any liquidity that will be taken out, I will expect that price should engineer a liquidity. And in this case, let me just change to the line chart so that I can show you the engineered liquidity. We have something like this. You see, if you create a I and take out that I as a liquidity. So that's exactly what happened there. But before that, before that was formed, let me go to how I actually find this particular entry. So here we have 4 hours FUG. From here to this I is a the space between the two is an FUG. So having that FUG, and we have our shoulder overlapping that FUG. So we can actually use the shoulder as our entry. But if we say that we have to use the shoulder as our entry, and our stop loss is to be above the candle that actually created the FUG, you see, like the targets, this is just something that could have done more than that. Let's retire this external liquidity here. Like it's not really good. But let's go and do our refinement. This is 2 hours times, then 2 hours time frame. What do we have? We still have the same I as the SL. So let's go to 1 hour time frame. So on 1 hour time frame, we can actually refine further. So there is something I usually look at before I can say, okay, I want to use this shoulder because it's overlap FUG, and that's what I'm going to show you now. Where I want to use that overlap FUG must have something like this. It must have a sweep and break, and also sponsor a sell before, also sponsor a particular move, a significant move, before I can say that I want to use that area as entry because it overlaps FUG. So something like this, I want to see something like this, a sweep and break, and price will go back to it, and it would have sponsored a sell. Then this particular I will now be the entry for me. And I'm using it because it's overlap FUG. That is when I know that okay, this particular place is actually valid. it's actually valid. So when you look at this on 1 hour time frame, you can see the same pattern here. Let me delete this. We swept this high and we broke this low, and we also have another break here. So since we have this, I already know that okay, wow, this is a good one because and its overlap FG is going to be a solid one. And this particular eye would have sponsored a sell, will be the one that this eye used to move, not just that it is just there, or it is what is it called, it is on fresh. It will be it will be not that it is fresh, it will be on fresh. Yeah, price would have mitigated it before moving. You can see this is the mitigation I'm talking about. Yeah, this week candle. Yeah, the week. Yeah, it's price use it to move. Now extending it to the future, you can see that it overlap FEG. So that's exactly my entry. And the candle that broke it with force, the eye of that candle is our SL on 1 hour time frame. Then we have it, how many hour? This actually did 4 hour. You can see 4 hour before reversing, and I think that is enough. Even for a week, 4 hour is enough. So this is how I actually refine the entry. And for the liquidity, you see, price engineered a liquidity, and there is something I usually look out for when it comes to this particular engineered liquidity. You It's going to create a high, and it will also break a structure just to induce earlier sellers or earlier buyers. You can see this is a high is created. um that one has a sweep as a, and it broke this low structure. So some people would have been like, oh, this is a confirmation, let us take the trade. It's just an engineered liquidity. Even that also show that it is a high probability setup, because many people are already manipulated. So and not that not that it only shows that it is a high probability setup, it also shows that my entry is valid, it is right. So you should see it, we have the engineered liquidity, and boom, price actually mitigates it and did further. So let me have a recap. I started with from the weekly time frame. Weekly resistance key level, price got there the first week, rejected. The following week, which is this week, it gave us 4 hour sweep and break. And on 4 hours time frame, we have FUG. FUG. So for me to actually use that FUG as my entry, I need to see a sweep and break that also sponsor a sell on 1 hour time frame. It is that I, the head of that sweep and break, that I'm going to use as my entry, and SL will be above the candle that's broke that particular level with force that created the FUG. And before price even get there, I want to see that price also engineer a liquidity just to show, to validate the entry, that the entry is actually right. Thanks for joining me today. I hope you've learned one or two things today. Have a blessed and profitable day.